Good morning, monsters. Today is Wednesday, March 16th. Let's take a couple things. Let's take a look at a couple things that are on my radar this morning. First of all, pretty stable markets overnight with not much happening. The S&P futures, the ES futures, have stayed in a pretty tight range for most of the night, between 5 to 6 point range. So there's not much happening, despite Trump and Clinton basically sweeping all the victories in the primaries, but that turned out to be pretty uneventful. There's a pretty heavy calendar that's coming up um, going forward, and we're gonna see a lot of the macro events that are going to be playing out throughout the day. First, we have the consumer price index at 8:30, so that's actually coming out in 1 minute. Housing starts also at 8:30. Industrial production 9:15. This will be important. The petroleum status report, because crude oil is actually higher in front of that report. So here's real-time crude oil. It's up a 1.8%, 65 cents, and we are basically consolidating. You can call this a bull flag. This low volume pullback in the last 2 days hasn't really done much. It hasn't actually broken down through 35.90. It's basically consolidating. So it is possible that if inventory reports are just fine, oil could actually push higher, take a new leg higher from here, and then push towards right here, I would think, where again the volume over price resistance comes into play. So we're going to be looking at about 41.13. So that's good, 8-9% to the upside if the inventory report comes out just fine. Aside from that, we have a big event today, which is the FOMC announcement at 2 o'clock this afternoon. That's going to be a big market mover. And this one is the first one since the rate hike in December, that's going to be followed up with a conference, with a press conference, and the Q&A session with Janet Yellen. So now I pressed my thoughts a couple days ago. Actually, it was just yesterday in the chat room when some of you were asking what the Federal Reserve is going to do and how the markets will react today after the FOMC announcement. And I mentioned briefly that really the only sector that I think is going to continue to power higher despite what the Federal Reserve does today. They're not going to raise the rates today. I don't believe it. I think they'll probably set the tone to do so in June, but I don't think they will raise the rates today. But I think what they're going to do is they're going to keep jawboning about, various things, whether it's the overall financial markets. They're going to talk about how the wages are actually going up, which is bullish, how the unemployment rate now below 5% is also good. So they're going to basically continue to set the stage for further rate hikes in the future. Whether it's right or wrong, only time will tell. But the only result that's the positive that's going to come out of this report, in my opinion, is going to be continue to be consumer staples powering higher. This is really the only sector that has been working. We have been making a bull case for this ever since in November. This was in my 2016 outlook as well, and here you have the performance. I think you're going to continue to see this perform further to the upside, regardless of what the Federal Reserve does today. Now, talking about consumer staples, yesterday Johnson & Johnson was upgraded from sell rating to neutral at Goldman Sachs. I mentioned this in the chat room. Goldman Sachs has been very, very bearish on consumer staples. I have no idea why. I don't know where they get their thoughts from, but they finally changed their stance and they went from sell rating on Johnson & Johnson to neutral. And interestingly, Goldman Sachs this morning is making another change, this time going after Kellogg, which had some news yesterday about some sort of, I don't know, some sort of FDA inquiry over cleanliness on some of their factories, and I guess somebody was found urinating on one of the belts. But anyways, the most important thing is Kellogg is one of the biggest consumer staples names in the market, and this morning this is another one where Goldman Sachs had a sell rating. I have no idea why, but now they're changing their stance this morning and upgrading it to neutral. So you're going to see the stock is guided higher slightly. It was closed at 75.09. It's around 75.75, so it's up. Here you go. This is probably a better look over here. Kellogg. So closed at 75.09. The bid in pre-market is 75.30, so it's slightly higher. So let's see how it does. Another thing that I'm watching is Chipotle, which is getting crushed this morning. It's down. It closed at 503 and now it's trading at 475. The company posted February same-store sales growth last night, which was minus 26% versus expectations of minus 23%. I mean, you would think that by now they would have a handle over things, but these guys are still suffering from significant just foot traffic declining across the country, and people just simply don't want to come to Chipotle and eat. Uh, so, so minus 26% decline in same-store sales in the month of February, and obviously the stock is getting crushed, which all tells me is that basically the Q1 results is going to be out sometime in April. Is going to be another disaster. Now, taking a look at the chart, here's what I find a little bit interesting. Actually, let's keep it back to the full view of the year. Now, this is where if I go here, this is basically your neckline. So right here is the neckline of what I see as a head and shoulders topping formation, essentially. So you had a head here, sorry, a shoulder here, and a head here, and a shoulder here. So you have a topping head and shoulder formation, and this was the neckline support. Call it 495, 500 range. And today in pre-market, it's breaking down through that, and it's trading around right here where the 50-day moving average comes into play around 475. I think you're gonna see this continue to see pressure, more pressure to the downside, because it may stabilize right here, but I don't see any news that can propel it higher back from here. So what you may see, the most likely price action, it's going to gap down right here around 475. It's going to stabilize for a little bit, maybe form a bull flag for a couple days, just kind of like flat line, and then you're going to see this boom take another leg down. Not a bull flag, sorry, a bear flag. I need another coffee this morning. So it's going to gap down. It's going to stabilize here. It's going to form a bear flag. It's going to stabilize for a couple days and will probably gap down again and head straight towards right here, which is the volume over price support around 439. So the point I'm trying to make is that even if it gaps down this morning and it seems like it's a lot of selling already, chances are it will stabilize for a couple of days around 475, 470, and then you will see this probably gravitate slowly towards 435 to 440 area, which is another 40 points to downside. And a breakdown, if it doesn't stabilize there around 440, then things are going to go a lot worse, because then I see no support below this that is significant. You're probably going to see this into next earnings report continue to sell up, probably go well below 400 again. Maxim this morning, the analyst at Maxim this morning is cutting the stock to sell rating with $350 price target, which is way down here, but that's a 12-month price target, so you're probably going to see this play out, if they're right, over a long period of time. So that's where Chipotle is. Another one, Fossil. How timely was this? Just recently in the chat room the last couple of days, I pointed out this chart and I mentioned how it filled a gap up to here and failed right at the 200-day moving average. I had a bunch of you asking me in the chat room last week, how should you play it when the stock was trading at like $49 or $50 a share, and I said just go buy April 50 strike puts. Basically buy the 50 strike puts in April and put a hard stop right here at the high end of the range, which is 52. Stock went straight down since then. Very ugly candle yesterday when it sold off, and it's selling off in pre-market again. Right here you can see it's trading down at 45 after closing around 47 yesterday. The reason is Macquarie analyst is downgrading to underperform this morning with $34 price target, which is all the way down here. I like how sometimes these analysts come out, they're basically more technicians in nature than they are actually fundamental traders, because as this analyst downgrades the stock, they're coming out with a price target that is perfectly in line right here with the gap fill. So basically the analyst is looking for a gap fill this entire earnings gap fill all the way back down to 34, 35 level over time. So that's where they're targeting, and I think you're going to see the stock actually go towards that gradually. The short covering that popped the stock after earnings is essentially over. Yeah, they were able to beat earnings, but let's be realistic. This company was expected to earn $8 per share until 2 years ago or a year and a half ago, and now it's making $2 to $3 a share. And frankly, the growth drivers are just not there for it to continue to power higher from here. So it was a short covering rally, and it's over, and I expect slow gradual deterioration from here all the way back down to mid-30s. ATU, this is the one that we discussed yesterday in the one of my videos in the afternoon. Let's see where the stock is. Well, it's not really doing much. It closed at 22.98. Basically, there has been no shares trading in pre-market. However, I just wanted to mention what did they do? They announced earnings this morning. The EPS was 21 cents versus 18-cent estimate, so they did beat earnings, and that's what we discussed yesterday. They're probably going to beat earnings, but they missed on revenues. The consensus was $267 million, and they came up with $263 million revenues. They guided down for the next quarter. Actually, for fiscal year 2016, analysts were expecting $1.30, 32, 33 for fiscal year 2016. They're guiding $1.30, so slightly less. They're also guiding down revenues for the fiscal year 2016. The analyst consensus was 1.16 billion, and they're about 1.14 billion. So this goes back to my original point that I made right here when I showed in the consensus view that, yes, they have a history that every quarter they come out with earnings, they basically end up beating expectation by a small margin, but makes no mistake that every quarter they guide down as well. So here you have the chart. Just, the earnings expectation just continue to come down. So let's see how the stock reacts. It's not doing much in the pre-market at this point. Another stock I want to quickly take a look at is Caesars. This is the one that's gonna it needs to bound. It needs to hold this $6 level if it starts to roll over. The stock is selling off in pre-market a little bit. I mean, here it closed at 7.2, and if I pull up intraday, right here, it's down like 12% in pre-market. I was looking at earlier, it was down only like 3%, and now it's all the way back down to that 611, so 629 bid and ask. So going back to my daily chart, it's trading right here in the pre-market, which means this $6 critical support will come into play, and if it's not able to hold, you're going to see this crash continue to probably low single digits. The reason, there is this article in Reuters this morning, right here, that Caesars could face a $5 billion hit from the bankruptcy examiner. So you can read all about it, and I'll post it in the chat room later today as well. But the company is facing tough choices here, with given high debt on the balance sheet and trying to work it out with the bankers, because simply the cash flows don't support it. So this is a pretty negative article on Reuters. Let's see how it reacts. We did talk about some of the unusual put activity in this a while back. So for example, if I go here, right here, just in the March 13, March 12, they came twice in the same day. One time in the morning, one time in the afternoon, and they were buying March 6.5 puts and 7.5 puts. We talked about this, and that was a couple of days ago only. Obviously, they were right. They perfectly nailed that trade. So here you have the stock gapping down by about 12%. So we talked about fossil. ZBH, this is another one I'm watching. Great stock. It's actually also in the med tech space. So let's see how we talked about just yesterday in my opening morning notes that there is essentially pretty good strength in some of the med tech space, and that's another one right here. Pretty good solid breakout. If I just draw the trend line here, rather than following the moving averages that most people do, right here is a pretty solid breakout through the downtrend, and look at the volume behind it. Now, if you want to see better volumes on this, I'll have a chart right here, Zimmer Biomet. This is the weekly chart. You can see the MACD is rising. The volume was pretty strong on this breakout, and first time in more than a year, it's breaking out. So it makes a very good case for a swing long entry from here. Again, this one was nailed by call buyers a few days ago, and we mentioned this in chat right here, They basically rolled March 95 calls out to April 105 calls. 2,500 of April 105 calls were bought on just a couple days ago on March 11 for $1.80. And so here is right here is the open interest. You can see that they were bought for $1.80. It hasn't changed much. It's still trading for $1.80 to $1.90 at the April 105 with stock breaking out. The reason why I bring this up this morning is because Jefferies is upgrading it this morning to a buy rating, and basically see a fantastic transition taking place from here. That's gonna the Jefferies is talking about cash flows being greatly underappreciated. They're talking about there's also $3 billion in overseas cash, which when combined with $9 billion of underlying free cash flow, that's $12 billion of incremental cash. And they believe it's going to be put to work, including in large M&A deals or large share buyback plans. They see as much as $2 of incremental earnings power by 2020. I know it's a long-term view, but it's pretty impressive because they're basically making a case that earnings power is going to be $2 above where the consensus is today, based on their analysis. So, strong free cash flows, a strong stock that's in the medtech space that's breaking out. Volume is very good. Bullish activity behind this with the large bull rolling calls out to April recently. Earnings are going to be coming out sometime in April 28th, so that's a far away, but I think what you're going to see is probably continue to see this power higher either into earnings or basically stabilize there after this breakout and then just go sideways for a while and then break out again and go towards maybe 110, which will be probably right around here. So I think this is going to probably give us an opportunity to get long at some point, maybe on a minor pullback or something, because what I'm ideally looking for is just basically stock to not fail here. I don't want to see fail breakout. I want to see this stock now that it has broken out. I want to see this just stabilize right here and then break out again. And I would like to play that trade to the up, trade that plan to the upside after some consolidation. So those are the things that are on my radar. Oh, quick one more note. UTEK. This is breaking out big time. Actually, it's trying to break out. This goes back more than a year. This major resistance right here around $21, call it $21 a level, is trying to break out. Yesterday, after market close, Carlson Capital announced 13% stake in the company. It's a pretty significant, sizable stake. So it comes in just in time with the stock is trying to break out through this $21 level. And if it is successful from here, with the major shareholder now backing it up, it is possible that you could see this gradually climb towards $23 level. Probably nothing significant, but that's still 21 to 23 is about $2 to upside, or call it about 8% to the upside. So another one that I'm watching, any minor pullback you get may provide a buying opportunities. You'll be just looking to buy the dip for ultimate move towards $23 level. Haven't seen much activity in this in the past, but I'm going to keep an eye out on this. The open interest on the call side, there's not much there. So biggest stake from Carlson Capital. Let's see how it performs from here. Those are the things in my radar. I'm sure there's going to be a lot more things going forward. And that's it for today.